let's go over to my Roth IRA. This is on the M1 Finance account. Right now, the M1 Finance account is up 28%. So once again, the M1 Finance Roth IRA is putting in a lot of work. You guys already know from the previous video that I have sort of just cleaned things up. I have put all my stocks into these sort of market sector pies. You guys see technology, healthcare, industrials and aerospace, real estate, consumer discretionary, consumer goods, finance, and utilities and energy. I in the last video, in my Robinhood portfolio video, I did sell AT&T, and I'm kind of wondering, should I just put AT&T into my Roth IRA and sort of just leave it that way? And as far as like having real estate, and I can make something like real estate and telecom, and just have a pie of telecom stocks and real estate, something like AT&T, Verizon, and then just take out Iron Mountain, because Iron Mountain and AT&T are at similar prices and they pay similar yields. So that's something that I'm thinking about doing, but I don't know what I'm going to actually do in regards to that. So let's go over the portfolio. We begin with technology up $18, and technology just really just shot off here. You guys already know from the previous video that I had to sell off all my stocks in order to buy new stocks into their market sector pie. So once again, M1 Finance, a very confusing app, but once you get the gist of it down, you can really do some cool things with it. Technology, you guys can see Microsoft has just absolutely just shot up here, up $7 already. Let's take a look. So my average price was 121, and Microsoft just continues to reach all-time highs. I don't think it paid a dividend yet, but at 8% already, and I bought it at 121, which I thought that was quite high. But it's just killing it right now. I think it's one of the biggest contributors to the portfolio. Microsoft, Activision Blizzard up 6%. Really good to see there. I like I like some of their games. That's why I bought them, and plus they were on sale when I bought them. Intel is up and IBM is up. So IBM has been a long contributor to the portfolio. Because I sold the stock, my percentage gains they disappeared, but still rocking it with IBM up 3%, along with the like 30% that I was up on it before I had sold the stock. So technology really putting in some really good work, some strong work with the technology sector. We're going to dive into the healthcare sector. Abbott Laboratories has gone up, so it's really good to see there. $1.37. United Healthcare Group looking really good, up almost 4%. AbbVie looking good, up 2%. I was actually down on AbbVie, but since I sold the stock, now I'm actually up on them. Let's take a look when I bought it. It's kind of weird because in M1 Finance, they keep your average price shares, the average price that you bought off the company. Like for instance, like I bought AbbVie like around $78 or so, but it kept my average price from when the last time I bought it, which was $84. So quite odd to see how M1 Finance did that. A very, very confusing application, but again, pretty solid if you just get the gist of it down. American Company, I'm up 3% on them. Healthcare sector still doing really good, almost up 3%. So let's take a look at industrials and aerospace, see what's in here. A.L. Smith looking pretty good, up 8%. United Parcel Service, UPS, 6%. Caterpillar, I think bought Caterpillar at a pretty good price. I think it was maybe about 122. Maybe probably bought lower than that. Pretty good to see with Caterpillar almost closer to 5%, and Boeing 0.75%. Was really big up on Boeing before I had sold it. So really shocking to see industrials and aerospace doing really good as far as like the trading war. I thought that sector would definitely be one of the target sectors to really just start buying some stuff, because industrials and aerospace are not doing good thanks to trading war. Real estate, take a look at real estate. Let's bring it up here. LTC property is still looking good, 3%. Reality income looking good. EPR properties down 0.38%. So interesting to see there. 4% on Iron Mountain. And I think real estate is starting to pay dividends, 83 cents already. So there's a lot of monthly dividend income sort of just generating with this portfolio. I might get rid of Iron Mountain again and just put AT&T there because I already have a lot of good real estate companies like LTC Properties, Reality Income, and I have EPR Property. So I'm probably looking forward to selling IRM and replacing IRM with AT&T because they're just at similar prices right now. So and they have similar dividend yields. So I can add some telecom to my real estate sector and make that look really good. So consumer discretionary, let's take a look at them. Disney was rocking it last week. I think it got all the way up to, it got back up to 141. So really big up on Disney. I'm glad they're into my Roth IRA. I'm glad they're into my retirement account. McDonald's looking good, Ford looking good, and Target is looking pretty good at 3%. So the consumer discretionary, kind of quiet. It's a quiet 3.21%, but I think Disney is the real breadwinner here. Take a look at Disney. 133.42. So, like I said, Disney has been rocking it. I think its stock got up to 141. Very, very good company. Very huge blue chip company that I really like. So this consumer goods sector, Procter and Gamble continues to go up. Very, very pricey, very overvalued stock. But I've still bought them because I can buy fractional shares of the company. This is one of the reasons why I like M1 Finance, because you buy fractional shares of a company, and you don't have to like overpay for that company. You can just buy fractional shares of it. If like you buy fractional shares of Amazon, Costco, all the overvalued stocks that are currently not on dips, and you can just pay like half the price for it. So that's pretty good. I like those features. You don't have to pay like the full price of a stock. So Procter & Gamble is 6%, General Mills of 4%, Colgate 3%, and Coca-Cola 3%. Coca-Cola, another stock that's overvalued. Really, really hard to find value in this market. A lot of stocks are just overvalued right now. And you guys saw in the Robinhood portfolio that I bought Waste Management at all-time highs. So that wasn't a good buy, but I just needed that stock into my Robinhood portfolio because of its defensive capabilities. So Visa looking pretty good. Let's take a look at Visa. 160, so I think it's actually at 170. Visa is just rocking it right now. Main Street Capital up 3%, JP Morgan up 1%, and Morgan Stanley up 2%. I started to go with Bank of America over Morgan Stanley, but Morgan Stanley was at a very, very good pricing point, 41.96. So I definitely think that this stock is a pretty good buy even at these levels. See, price was at 42.82. So yeah, Morgan Stanley have a pretty good dividend yield on them, and the finance sectors is doing good. Pretty much all my sectors are doing good. I'm up on all my sectors, and this market, it continues to go up here. Utilities and energy, PPO Corporation 5%, closer to 6% with this stock. Dominion Energy up 3%, ExxonMobil up 2%. Had these companies in the Robinhood account some time back, so I'm probably up a lot more than that. And Royal Dutch Shell up 1%. So let's take a look at earned dividends for utilities. So utilities for dividends, energy utilities and energy dividends are contributing to the portfolio already up $1.06. So very, very good sector to have, or sectors to have, utilities and energy. And that's gonna do it for the portfolio, guys. This is my Roth IRA, so it's tax free. I don't get taxed as long as I hold on to my money and just keep adding into the Roth IRA. This is a retirement account. Pretty good. Sectors that I have in the retirement account now. And I just like how I just cleaned everything up. I got some nice growers, Visa, Disney, United Health, Abbott Laboratories, all these nice growers in the portfolio, but they still pay dividends and they still don't change anything as far as like my strategy. So portfolio is still rocking it, almost 30% now. Earned dividends continue to go up. Now we're at $60 worth of earned dividends on this account, and I started this account in February 16, 2018, and I've been holding it all the way into June 15th. to 2019. So you can see all this volatility. This huge spike up is when I put like $1,000 in, and I'm definitely looking forward to putting more money into this portfolio. So cash balance 0.82. So the portfolio did do a dividend reinvestment plan. It dripped it $10 back into the portfolio. So that's always good to see there. And let's take a look at some more stats for you guys. Right now, the portfolio is yielding 3.3%, almost 3.6% for the entire portfolio with no expenses to boot. So excellent. Dude, I just love how this portfolio. I did sacrifice a little bit of dividend growth for capital appreciation, but 32 holdings and no expense ratio is basically an ETF that doesn't have any expense ratio. So that's the power of M1 Finance and how it just continues to just rocket here. You guys can see how my allocation is put out, and yeah, that's pretty much it, guys. That's pretty much it for this video. I hope you enjoyed it. $1,724. I think it's actually time for me to start putting some more money into my M1 Finance account. I have neglected this account long enough. I want to max it out. I want to get this thing to probably about $5,000. And this is my retirement account, so I definitely need to treat it better and start maybe putting in $200 every single week into my Roth IRA. So that's gonna do it for the video, guys. Thank you for watching, and I'll see you guys next time.